Hey guys, okay, let's get into some charts. We've had a couple of big moves in the last 24 hours. Crypto continues following stocks, so why don't we start there? Actually, it might be a little bit easier. So, what's basically happened is we've sort of been screwing around at the bottom of the range. This is the 2022 low that we recently swept. So we've sort of been stuck inside of what I would say is this trading range for the last few weeks. Deviated outside of it up here. Now it looks like we're deviating below it as well. We've swept these lows. There wasn't a huge order block for us to tag into. I guess you could kind of say that maybe this was an area of support. I don't love that as like the low. To me, a more significant area where I would be looking for some major long-term bottoming, this would be more likely. I don't think this in and of itself is enough to completely catapult us back to all-time highs, especially when you're looking at sort of the macro outlook that we've got going on right now. So if we dive down a little bit deeper, daily's looking great on S&P right now. So you've swept this low, you've taken all these guys out. I'd like to see it fill in some of this inefficient price action above. So essentially we've gone straight down for 6 straight days, getting some relief now. I think the obvious draw is to test this area. Maybe we tag into it, maybe we don't, but certainly this would be the first area I'm looking to take some off. I'm currently in a couple of longs. I'd be looking to take it off here. If we can flip this higher, then I would be looking more towards filling in some of this fair value gap and then maybe taking out the top of the range too. But so far, daily closes like this, looks good. You could maybe drill into some lower time frames if you want to get involved in some longs if you're not there already. But what you don't want to see from a low time frame perspective is us start swinging these highs and then closing back below, because then that would essentially look like a deviation of this range, and you would be expecting it to dump back down. So far so good, but let's just keep an eye on that. All eyes have really been in the dollar recently, so this has just been in a massive uptrend for basically a year and a half. So there's just been no signs of slowing down on this guy. I think the obvious draw before it's all said and done is for us to swing these areas at the 120s. That's going to be pretty gnarly for the rest of the world if we start seeing that. So I think if you start pushing into this area, you're going to see the US have to pivot a bit, because from a debt perspective, it could get extremely precarious for the rest of the world to try and repay debts when the dollar's at such a high level, when interest rates are so high. It's just something the rest of the world's not going to want to see. So keep an eye on this to see how it plays out. From a monthly perspective, we are into some resistance here. This is an obvious place where you would expect pullbacks. But also, it looked like we were going to pull back here. I'm not one to call the dollar top without it being structurally obvious that it has. So we had a monster close candle last week, just no signs of weakness. Let's see how this week plays out. With something like this, I think it's better for you to play higher time frames. You don't want to be drilling down to the hourly on the dollar and trying to catch the top. A daily like this swing fail pattern could get some relief in risk assets, but it could also just be like it happened here. Like you got, 4 days of down and now we're up, 7% since then. So I'm not ready to call this the top yet. A lot of people have been talking about this divergence that's been building on the weekly. So you've got this bearish divergence that's been building since May. Again, this could just keep going and going and going and going. We saw this on the S&P. If you look going into, when did this start? Yeah, 2018. So the weekly divergence started in 2018, continued into COVID, and never fizzled out and completely topped until the end of last year, you know? So you've got 3 full years of weekly bearish divergence. So I don't necessarily think that just because we're diverging here necessarily means that we have to pull back. So certainly want to keep an eye on the dollar, but I would use higher time frames to pick your spots as to where you think you might get some relief. If we're looking at the daily, you can see dollars struggling, which is why risk assets are up. So far so good for the daily close for risk. Let's maybe look at Bitcoin and Ethereum since we've covered stocks. So sort of the same thing that we saw with S&P. The difference is Bitcoin has swung these lows, but it never swung the low of 2022. Interesting thing though is if you actually look at the CME chart, which is the Bitcoin futures, it did swing the low for 2022. So if you pull up this chart on the right, you'll see the CME, the futures guys in the US, swung the low. It swung it twice now. So it swung it first early September, and then it swung that low last week. And now we're looking for a push. So everyone's paying attention to crypto index charts like the one on the left and just waiting for the 17.6 level to go. It could be interesting to keep baiting people into waiting and waiting and waiting to buy this sweep and reclaim, when if you think about CME, it's already happened. So maybe we get a push and then everyone has to chase. You squeeze out all the shorts. I don't know. I don't know which way it's going to go, but that one's certainly worth keeping an eye on, and could get interesting if we do start pushing here. The reality is we're just in chop, and we've been in chop for a while. You're chopping above sort of what I would call this zone here. So this is the 2017 all-time high closing level, and then the wick high. Also pretty clear resistance here from June of 2019. We're just chopping above that. I think it's a good level, and it's pretty much the only level of support you have until you're looking at maybe like the 12 to 14K region, which you don't really want to see happen just for the sake of crypto as an industry going forward. So weekly, I expect us to just continue chopping here. You've got this range that we've all been sort of accustomed to, deviate above, now we're deviating below. Maybe we get back inside it. If you do from a wick to wick perspective, same thing. Swept it. You could argue you're going to chase the mid-range, but there's no obvious draws for me right now, aside from the fact that we've swept the lows. Generally in range trading, you then expect midpoint, range highs. We also have really inefficient price action up here from the dump earlier in May, and we've never really tested that. I think that's a lot to ask in a bear market for a 50% rally from here, but we've seen crazier rallies in the past, right? So it's not unheard of to have a 50% rally, but I don't think that's something that if you're going to enter along now, you should be expecting. I think you should be playing sort of, if you're playing counter trades, you want to aim for smaller objectives. And if you hit the home run, great. But if you go into a trade saying, I'm going to long it here because we swept the lows, here's my stop, and I'm not going to take anything off until we get to this order block, I think that's a bit aggressive. So you want to be taking your profit sooner, especially when you're doing counter trend trades. Daily is looking good, but the thing is, S&P is really going to be the one dictating things. So Bitcoin may follow it. Bitcoin will follow it, especially for now. We haven't shown any signs of decoupling or strength from Bitcoin aside from equities. So what S&P and NASDAQ do, Bitcoin's going to do. But right now it's looking pretty good. I do want to see it for the daily close above this level. To me, that's sort of the part where we haven't been able to break through. If we can close above that, if we can close above this monthly zone that I outlined, that looks great. Really, when we start getting above this area and the one next to it, that's when things get interesting, and I would be looking for a push again to this mid-range up here, which also nicely fills in the dump candle. I believe this was from FOMC. So you want to see those levels clear. We've got the 2-day coming up in a little bit. Again, same areas that I want cleared. Same with the 3-day. 3 days looking pretty good, but there's plenty of room for us to, target 21s somewhere in there. 20.5, 21s. Both of those look pretty good. If you want to drill down a little bit lower, it's a pretty tight 12-hour range that we've been in. It's just sort of like something that we've been chopping in, and it's going to break eventually. It's just a matter of which side you think it's going to be. So we swept these lows. Now we're going back to the highs. You want to see how this 12-hour closes. I want to see if we've swept all these lows. I want to see signs of strength here. I don't know if we get back above the 22s, 2200s up here by this 12-hour close, but if we can get outside the range and close outside this range, I think it starts looking better. So 4-hour looking super strong. You don't want to start seeing SFPs up here. So I'm going to be watching this in the next 4-hour close. You had this monster candle with basically no downticks. You want to see strength continue. It is the lunch hour in the US for stock trading, so that's taking a little bit of a breather, but once it opens back up for the afternoon session, you do want to see that continue pushing. Low time frame, same story. If you're looking to get involved, this was sort of your area to do so. So you had the break in market structure through here. So that's your swing high, close through it, tagged back down into this area once we got above it. That was your long candle. If you weren't already involved from lower, stop goes there. Target 1 would probably be top of the range. Not a great R. Target 2 is probably going to be somewhere up here. Right? Something like this, I don't think I would have taken this setup because this is you're going to aim for top of the range basically just as like your first entry. It's a 1-to-1. That's not terrible, but what you likely would have wanted to do is drill down a bit lower. So this is the better entry in my opinion. So you have this breaker right here. So down candle before this up move, breaks market structure, goes up. So you're entering on this little down candle right here, which tags the top of that breaker perfectly. Stop goes lower. It's a much better R. 2-to-1 at the bare minimum. If you want to hold on to some more just in case we start squeezing, that's fine too. But I always recommend, starting at high time frame, drilling down a bit, and getting yourself a tighter entry, especially if you're doing these counter trend trades. So that's all I've got for Bitcoin. Ethereum is going to be very similar. Again, everything is following stocks. Ethereum has held up better. It's obviously popped up a lot more than Bitcoin has. It's held up a little bit better for now on the bounce. Obviously, Bitcoin is sweeping the lows. All Ethereum is really doing is tagging down into this weekly order block and getting some relief. So from a daily perspective, we've swept these lows here, and now we're getting a push up. Swept these lows, and now we're getting a push up. So I don't like it if it closes right here, because to me that says you had pretty successful sellers and buyers couldn't really push. I would prefer if we start closing certainly above here on the daily for Ethereum. I would be way more comfortable if we start closing it above there for Ethereum. You do have a long tail here, so if we close like this, I actually expect at least a bit of downside, if not more. So you want to see some strength into the close here on Ethereum. If we drill down a bit, you can see, again, this is just a chop zone. Same with Bitcoin. We're just chopping around, right? You've got this little range that's been built. I mean, you can draw this a few ways. That's not great. I would probably draw it here. Here, maybe? I don't know. Just looks like crap. So there's just not a good place to draw this. Got deviation, deviation, swung it again. You're just chopping around the mid-range. So yeah, I don't have a clear play here on the 12-hour for Ethereum. 4-hour looks good. I actually took some longs on this candle because we had SFP'd all of these lows. The S&P was pushing and was breaking back through. So the S&P basically swept the 2022 lows that we talked about earlier and then reclaimed them with authority. So I think at least for a short term, that looks good to me for a bounce. What I don't like about Ethereum right now is the fact that we're sweeping sort of these highs and showing some weakness. I would rather see us continue pushing. Now, not quite an SFP yet, but if we push up and actually sweep that top level, that's not looking great. So where SFPs happen are important. This hasn't really gotten any traction sweeping here, but I do want to see how this candle closes. The hourly has closed as an SFP of this level. You didn't get the SFP here. This is something I would be looking to take some profit or at least tighten stops here just to see if we keep pushing or if this is it and this is the only rally we get and now we're just going to roll over. So that's sort of it for now. How could you have gotten involved if you didn't go in on the 4-hour like I mentioned? Well, you basically would have done it here on the 1-hour, right? So you've got this, I would say this is the breaker. So to me, this is the down candle that started the move. You could technically say it's here, but I don't like that as much. So what you would do here is you get involved on the breaker retest. Worst case, you just put it at the top or you layer in some stops. Generally, your stop is going to go below the swing low next to the breaker. You could be super conservative and put it below this wick. I would probably put it here. And then target 1 is going to be recent highs, which we didn't quite sweep. And then target 2 is substantially higher. So that's how you could have gotten involved if you didn't already. So then what are we looking for going forward? I think, we're in this chop zone. What you have to be looking for is clear breakouts in one direction or the other, right? So 12-hour, we've swept the lows. You broke market structure on Ethereum back here. So you would have expected a breaker retest maybe in this region, go back down. You got that several times through here. Then we broke structure to the upside. Now we're testing again. Like, this is just a chop zone. Your new range for now is right here, right? So it's your impulse high, your impulse low. We're at mid-range. To me, if you're going to get involved in anything, you need to wait. The 4-hour had a pretty clear long setup. Maybe you wait and look for shorts up into this 4-hour order block, up candle before the down move, broke market structure, swept these lows. That's a 4-hour breaker to me. So you look for shorts in here. If we flip it, look for longs targeting this gap above, right? 1500s, 1600s, somewhere in there. Bitcoin, same thing. I'm going to be drilling down lower time frame and figuring out sort of what I want to get involved in. I don't like that it's SFP in this high right now. I want to see how the candle closes, but if we close like this or some other, lower SFP, I'm going to be taking some longs off and just waiting and reevaluating. This is a chop zone, so it's better to get in, get out, make your money and move, as opposed to waiting for these home run swings that may never come. It's more likely that it just continues chopping than that it breaks out. When it does finally break out, you're going to be looking for some better setups, but you don't want to get faked out like this where people who longed late got totally wrecked and people who shorted late are also getting wrecked. So be smart, wait for the setups, don't overthink anything, and manage your risk. That's going to be the most important thing. But as always, thank you guys for tuning in, and I will see you next time.